about, I would like to invite Mr. Rajesh Sehgal, BIO, to share his knowledge on mentoring and networking. Before he joins us on stage, I would like to introduce him in front of you all. Well, he's a long-term investor with tremendous breadth and depth of experience, managing early-stage investments, private equity and public equity funds for over 2 decades. He has on-the-ground experience across emerging market countries, analyzing various industries and businesses, spanning different stages of their life cycle. He is relentless in his quest to further to his understanding to the world and bring to bear this rich experience in refining his investment approach, which results in superior decision making and delivering better investment performance. Ladies and gentlemen, please put your hands together to welcome Mr. Rajesh Sehgal on stage. A very warm welcome to you, sir. It's the closing keynote now. We look ahead to this.
Hi everybody. I'm going to spend a few minutes discussing mentoring and the use of mentoring and what is it all about. And just to give you a little background as to how I got introduced to this whole idea of mentoring. This was like about 20 years ago. We were meeting some companies. 20 years back there was no startup ecosystem in India, by the way. So this was a listed company. Listed company I'm talking about. The meeting went well. We asked them all the questions about their business, etc. And at the end of this whole meeting, they turned back and they said, why don't you tell us something about how you see our business? Right? And I was very new in the whole investment world, so I found this question a little odd because who are we to tell them about their business? Right? That was my thought process. And then from then on till now, I think I've come to realize that this question that companies ask us of investors is one of the most important things that they take away from meeting investors, right? And there have been various experiences of how we can mentor companies, what they seek from us, whether they like it or not. So I'm going to dwell a little bit on, around this topic of conversation. So what is really mentoring? Can investors really help companies? Do we really know what it takes to run a business? Whether it's a listed business, whether it's a small company, or whether it is a startup. Right? The honest answer is no. Right? I won't tell this to entrepreneurs that I'm giving them money, but the honest answer is they know their company and their business best. And I think as investors, I've come to realize we have to respect that fact. Right? So what can we help them with? Right? There are essentially two things that I think investors can help companies with, and especially about the startup ecosystem. One obviously is the money, the capital that we give the company. Right? So I'll just take a step back and ask you to think of a business's life cycle as an analogy with a newborn baby. So a startup is like a newborn baby, right? And I think it helps the whole thought process of what mentoring is all about if you think it is, right? So what does a newborn baby need? It needs food, right? Now when you talk about a company, that's like capital, providing capital to the business. Now if you give food to a baby, it's essential, but it's not all. Similarly, when you're talking of investing in a company, in a startup, they need capital, right? Especially in a country like India, because remember, India is still a very highly capital deficient society. Capital has to be respected in this country. So a startup does need money, and as investors, we provide that input into the business. But I think along with that check that we give the company comes a lot of other things that we can add to the business, which is experience. Right? And here is my point. Investors with a lot of experience, I think, are key to investing in a startup. So when a startup is looking for investors, this is what I always tell them. The quality of money doesn't mean what is the reputation of this guy or the firm. Are you dealing with that person who can add value to your business, to your whole journey from a startup to a grown-up business, right? And that I think is the key. So what is this experience that we can add to the startup? And does the startup guy even respect that? Right? And I can share my experience with you. There has been a big change. 10 years back, when I started investing in startups the first time, 2006, 2007, I could sense that these guys just want the money, but they really don't care too much about the advice that they're giving. And I have some good news to share here, is that over these 10 years, I have seen this change a lot. Right? I mean, so you still have a section of entrepreneurs who are very clear that they need the money and they don't need any advice. Just give us the money, we know what to do with it, we'll make money for you. So that's one section of entrepreneurs. And then there's another section of entrepreneurs who say, you know what, we have this young team of IIT or IIM graduates, and we have all this passion, this idea, we're going to do it, we have a lot of energy. But the two things that we don't have are capital and experience. Right? So you give us the capital and you bring your experience to bear. Right? And this is what the big change that has happened is. Let me give you an anecdote, right? Personal experience in the listed space again, private equity space. This is just before the global financial crisis, right? I was managing the public equity funds at Templeton in those years, and if you're familiar with how the investment banking and the investment world works, very simply, if a company wants to do an IPO or they want to raise capital, they'll invite a few investment bankers, right? And then 5-6 investment bankers who want to pitch for that deal will come in and tell the company why they should appoint this investment bank to manage the whole process, right? And this whole process is called as a beauty parade. So there's a whole beauty parade that happens. Teams of Goldman Sachs, JP Morgan, all these guys will come in, present, we are the best, we have this experience, etc., etc. But right before the global financial crisis, tables had turned, right? Companies in India, and I'm not talking about anywhere else, in India. So companies, and I'm not going to name any of those, but when they wanted private equity investments, they actually conducted beauty parades where investors would go in the room and present to them as to why they should take money from us and not from the other investor. Right? So this is essentially about they're saying, what, we understand that you can give us the money, there's enough money in the world, what else do you bring to the table? Right? And this is the question I think that every startup entrepreneur nowadays is asking. They're saying, okay, fine, we need the money. What else do you bring to the table along with the money? And that I think is the essence of mentoring. So when I think of investments, in my opinion, mentoring is embedded in the whole investment process. Right? It is an integral part of investing. Look at it like this, right? You have $1 million. Now either I can take that $1 million and invest it in the stock market, or I can take that $1 million and I can invest in the early stage companies, startups. Right? What is the basic fundamental difference between the two? In the listed space, I can have as an investor no influence on the outcome. The outcome is what it is. If Reliance has gone up 20% in a year, it's gone up 20% in a year, I have to take that out. In the early stage ecosystem, on the other hand, this $1 million that I put in there allows me to have a lot of influence on the outcome. Right? In fact, I would go to the extent of saying that if you invest in the early stage ecosystem, you have to, it's your fiduciary duty to have an influence on the outcome by mentoring the guys, by being involved in their business, because you are on the same side of the table. Right? So this is how I think mentoring is so important. In fact, after 24 plus years in the stock markets and 17 years managing private equity funds at Templeton, I've been involved in the whole angel ecosystem, early stage ecosystem for the last 10 years in a personal capacity. So this year I stepped out and I've set up my own fund called Equanimity, which is going to invest in early stage companies. Yeah. I'm not pitching here for Equanimity, but the point I'm making is, if you visit my website and you see the logo is a butterfly, right? And the reason I've kept that logo as a butterfly is because it comes from a theory in physics. Again, I'm not going to get very technical here, but there's a theory called chaos theory, which is represented by something which is called as a butterfly effect. And the butterfly effect essentially means, in a very exaggerated form, that if a butterfly flaps its wings in Brazil, there will be a cyclone in China. Right? And that's a physics theory. Right? But that's very relevant for the startup ecosystem. Because the chaos theory says that for any system, if you change the input, the starting point, the initial status of that system, by a very small fraction, the impact on the outcome from that system is much higher, it's much magnified. Right? I don't know if you're familiar with this whole Russian satellite which collided into an American satellite in, I think, 1999, right? And there was a big crisis between US and Russia in those years. And the reason that this collapse happened, I mean, there are all these conspiracy theories that, they purposely did it, etc., is because the calibration, the beginning of when the satellites was launched into orbit, the calibration was off by a few thousandths of a millimeter, which resulted in a big change in the orbit of that satellite. So it actually went and crashed into the other one. And I think this is very relevant for the startup ecosystem. Investors like us have to get involved with startups, mentor them, help them, because every small change in the beginning stages of the life of that enterprise is going to have a huge impact as to what is that whole thing evolving into. Right? And that's why, I mean, as I said, if you go back to my analogy of thinking of a startup like a newborn baby, we all realize that, the way you give nourishment and take care of the baby has a huge impact on how the adult becomes, right? All along the process. The other thing that I would like to just, leave a thought about this mentoring thing is that, and again, coming from experience, there are times when a lot of entrepreneurs who've taken money from angel investors or early stage VC firms feel that the investor is too intrusive. They are too interfering in what the business is all about. So, which essentially means that somewhere as an investor and an entrepreneur, you need to have the understanding of how much involvement is good involvement. Because beyond a certain threshold, that involvement becomes interference, which doesn't help either party, right? And I've written a piece on this. You can search it online. Essentially, what I'm saying is there's a curve. On the x-axis is timeline, and on the y-axis is an investor's involvement with the startup, right? And the curve initially jumps up to a very high level, which essentially means that when you invest in a startup, your involvement level with that company goes up substantially, right? And the curve has to remain at that elevated level for some time. And that sometime can be very different for, it can be 6 months for some company, it can be 2 years for some other startup. So that sometime is variable, it depends a lot on the whole, which sector, which business, how much involvement, etc. The point is, after some time, that curve has to fall off. It has to really come down. And if it doesn't come down, in my opinion, there's a problem. Right? Now, why is there a problem there? There are two reasons, I think, why that curve doesn't come down in terms of the investor's involvement with the startup. One is that in that some time that the investor has been helping and mentoring the startup, he's been unable to help the company in building up systems, processes, team, etc. to a level where they are now independent. So if the investor has to remain involved beyond that certain point, which means things are not good. The other reason why an investor remains involved beyond that threshold point is that he's just interfering now, right? Which is also not good for either party, I can tell you that. So it requires, and I always mention this, it requires a mix of IQ and EQ to be an angel investor or to be an investor in any early stage companies. So IQ because you need to really bring a lot of value and mentoring to the company and the business. And EQ because you have to manage the entrepreneur very well, right? Because inherently there is a conflict there, right? Because the entrepreneur's involvement with that startup is like a, in the CA community they say a going concern. Right? It's for life, right? Mostly. But the investor is not going to be invested for life. By definition, investors are, they're not short term. Even if they invested for 7 years, which is a really long term involvement, it's not as long a time horizon as the entrepreneur has. So there is a discord there. And I think the responsibility of managing this discord lies completely with the investor. So, I can go on and on, but I think said there's a limited time here. But I think I'll just leave you with these thoughts. A, when you are investing in startups, please remember that the investor has a lot of responsibility. So the entrepreneur has a responsibility of making his dream come true using your capital and your experience. And I've been very clear about this with companies that I have interacted with, saying that, this is who I am, this is what the fund is, this is what we do, these are the people, these are the avenues. You tell us, or you draw down upon this resource. How much involvement do you want? Some entrepreneurs just don't want your involvement beyond a certain basic minimum hygiene level. Thank you. I don't have points. So, coming back. So, sorry, where were we? Yeah, really, where were we? Investor's responsibility, right? So it is, as an investor, our job is to provide the capital and then the experience, etc. that I was talking about. Now, as an investor, you have to tell the entrepreneurs that this is what comes with the check, because the big question always that entrepreneurs have on their mind, and I think if they don't, then there's a problem. I think they have this question: what beyond the check, right? So you will give us, say, $1 million that we're investing, or $500,000 that we're investing. Now, what else? What are the other areas where you can help us? And I can tell you that this question is relevant not only for startups but also for mature companies. Right? So when I say mature companies, these can be larger corporates, including a Reliance, by the way. So these companies have access to the best consultants, your McKinsey, BCGs of the world. They have the best advisors, they have the best legal advice, they have the best in-house team because they have the resources of the cash flow to manage all of that. Right? Startups, on the other hand, don't have any of that. Right? So even the larger companies, I can assure you in my meetings with them, and, as I said, I was with Templeton and with Dr. Mobius, I would have met more than thousands of companies over the 17 years that I worked with him. Most of those meetings would end by the company asking us, right, tell us something that we need to change. What's your feedback? What do you think we should be doing differently? Or where do you think our industry is going in the next 3-5 years? And these are questions that they are asking us. And as I said in the beginning, those guys are running the business. They know the industry in and out. They spend their whole life doing that. But they're still looking for some help, some advice, from independent investors. Now, with all this infrastructure that they have, if they're still looking for advice, I see this as a sign, not of weakness, but of a lot of strength. Because these are guys who are open to taking suggestions, ideas, and they are open to innovation. They're open to doing things differently. Now, come back to the startup ecosystem, where neither does the startup have money to appoint a well-known consulting firm or the best legal advice or whatever, the best technology guys, because they are running low on capital. Right? So in the case of a startup, the kind of involvement and advice that you have to be giving to that startup, your responsibility as an investor has certainly shot up a lot. Right? When you look at the Indian ecosystem, the startup ecosystem, I think it's very evident that it's come a long way over the last 10 years. So when I started investing in early stage companies, 2006-07, the ecosystem was very, very nascent. To the extent that I still remember the first investment banker who came to me with a startup deal, right? And I said, are you going to set up an investment banking firm to focus on startups? And he said, yes. I said, all the best. Because there were not enough startups and there were not enough investors, right? So what is this matchmaker going to do? And after 3-4 months, he shut shop, obviously. From that stage where the ecosystem was, today there are enough and more investment bankers who are doing this for a living. Which essentially means there are enough and more investors looking at this ecosystem, and there are enough and more startups which are coming out from these IITs, IITs, etc., other institutions. There is, and as is natural, any new ecosystem or an ecosystem that is growing, for that ecosystem to become more robust, a lot of building blocks have to fall in place, right? And in my opinion, in India, I think we are seeing that. We are seeing a lot of these building blocks fall in place, right? And that's all related to this whole what's more than the money, right? So therefore, you have mushrooming of these co-shared workspaces. You have accelerators, you have incubators. What are all these people doing? They are not only providing space or money to these startups, they are actually providing a lot of other inputs to the entrepreneur community, which helps them in their way. Look, people like us who, done 20 years or 20 plus years of work experience, etc., and understand whatever they're doing, I can assure you that each of us, in whatever we're doing, we do pick up a phone once in a while to bounce off an idea of someone we trust and we respect, right? And that's nothing but mental. You're looking for a mentor. You say, what, I think this is what I should be doing. What do you think? Right? Now imagine after all this experience, you still need that input. For a startup, the newborn baby, all these inputs are very critical. So I'll just wind up here by saying that angel investors have this responsibility of providing much more than the capital to startups, right? Again, before I close, just one point. So you have angel investors who invest in the startups, and I define them very separately than high net worth investors. Right? High net worth investors are those investors who have the capability of cutting the check, 10 lakh, 50 lakh, 2 crores. They can invest in these startups. So they provide the food to the newborn baby. But the high net worth investors do not have the time or the inclination to get involved in the business. Right? And therefore I draw this distinction between angels who provide the capital and the mentoring part to startups. And then there are high net worth guys who don't. Right? And I think as a startup entrepreneur, it's extremely important, I think, to understand the difference between the two. Right? Because if you're, as an entrepreneur, on the mindset that, look, I just need money at this time because I've got everything figured out, and advice is not of too much relevance at this point in time, and it may be true, and you go and take money from some investor who's going to be very involved with you, wrong decision. You need a high net worth guy. You just need to check. Right? And on the flip side, if you're an entrepreneur who's running a startup and you believe that you need a lot of support, you need someone to make the introductions, you need someone to discuss go-to-market strategies, pricing, product features, etc., or technology, then you should be very clear, and please do your diligence as an entrepreneur, that you're taking money from the right set of investors. Okay? I think with that I'll close. Thank you so much for your patient hearing.